Welcome to TMS Insights. It's reporting season here, mid-August. We've been very busy, Ben, hearing a lot of the company's full-year results that have come out. We might just quickly touch on the broader market because the last time we did a TMS Insights was after quite a bit of ruction in the market a fortnight ago, when out of the midst from Japan, sort of a tsunami happened around global share markets. And we did make some comments at the time, which we could briefly reflect on, but also to reflect on what's happened, which has been, here locally, a recapturing of the 8,000 mark for the ASX 200, and markets are remarkably calm all of a sudden.
Well, it was all over in 2 or 3 days, wasn't it? It was bizarre. It came out of nowhere and it was very short and sharp and pretty nasty, but it settled down remarkably quickly as well, which, to be honest, was a bit of a surprise, I would say.
Yeah.
You normally... Sometimes you can get, a bit of a rally and then a retest and we go from there. But having listened to a lot of results over the last couple of weeks, I would say it's been positive. And,
and that's the big news.
Right at the ship in some ways as well, I think.
Locally, yes.
Yeah.
Earnings news overseas as well too. But let's get into those results here because they're coming thick and fast. We will bring you another update when the reporting season's done at the end of August. But let's go through some of the big ones. And Ben, right at the top of the reporting season every time, not ironically, I don't believe, is one of our favourites, REA Group. And again, you just bewilderment how strong this company is.
Yeah, and this was one of the best in a long time, which we kind of knew it would be, and the market sort of knew it would be because they were cycling against a very weak period in the property market.
Low listings.
In terms of listing volumes.
Yeah.
And they'll be in another sweet spot for another 6 months. Then they're going to be cycling some pretty strong conditions.
So it won't be as easy for them.
Just worth remembering that.
Yep.
We've seen this over many years of owning this business. But, they're pulling ahead of Domain. There's so many tailwinds going in this company's favour. The Indian business looks particularly interesting now.
Starting to happen.
Yeah.
More than a lot of offshore businesses, because they bought iProperty, as we know, Southeast Asia. That hasn't happened. But the Indian one's looking really...
Yeah, I've always thought the offshore moves, it's been a mixed bag.
Yeah.
You're probably better off just sticking to home. We're seeing this with businesses like Domino's and all these sort of things. They went overseas. It's just not delivering the way. But the Indian business, they are the number one leader in the Indian market. They're growing very rapidly. They're saying they can start pulling back a bit on investment. Still got a loss-making business.
But you can see monetisation.
Bit of optionality in there.
A lot of optionality in a growing economy like that is. So they're executing their international strategy better than most companies, I think, is the
definitely.
part that impresses. CSL's a really massive company.
Another executing well overseas.
Well, yeah.
That's probably the gold standard.
It is predominantly an overseas business, great Australian story. Share price has come and gone a bit of late. It rallied into the result, sold off. It's bounced up again, Ben. Company, always gives pretty conservative guidance, but there's a great underlying story there.
There is, and the engine room of this business is Behring, the blood collection business, and that was the main focus of the result and the presentation was the normalisation of margins and volumes coming out of the pandemic, which has taken longer than expected, but it is on that path.
Yeah.
So that was a big tick. I think the jury's a bit still out on Vifor, the acquisition they made. I think the market is still scratching its head over that.
That was the part that puzzled the market, and they don't know whether it's money well spent.
And they've got a great track record of M&A. So I think everyone gave them the benefit of the doubt when it happened, but we're not really seeing the numbers that maybe we thought. And Securus, the flu division, they did sort of word up the market.
Yeah, they prepared the market for this one, yeah.
Well, there's a bit of vaccination fatigue. And so that has had a short-term impact on that business as well.
But overall in good health, the moving parts are
looking really good.
Looking good.
Yep.
Australia's largest bank, Ben, is the only one that give full year results at this time. Commonwealth Bank has been on a tear, and you could see the numbers playing out. Beautiful ex-dividend today. Big dividend, 250. So what a story.
Yeah, it's wrong-footed. I reckon 95% of Australian fund managers who sold out some time ago.
Shorted in many cases.
Some are short and, they've got some difficult decisions to make potentially if this keeps going. But look, you wouldn't say you'd look at the result and match it up versus the roaring price, other than to say the banks were so unloved a year ago.
Yeah.
And there was so much fear of a recession and bad and doubtful debts and all this sort of stuff. There was a big mortgage war going on back then as well, which is, we're seeing term deposit rates are falling rapidly now.
Margins are widening a little bit, and it's a turnaround.
So there's some things to like there.
And the other thing I think the market worth talking about, because it's other banks that have rallied pretty strongly as well. The capacity for AI to deliver benefits to the biggest players in the space.
Absolutely. And there's the banks, the insurance companies, anyone that's doing huge amounts of manual work that still needs humans to do it could take huge amounts of costs out of their business over coming years. So it's not going to happen next year or the year after, but I can tell you, we saw Jamie Dimon at JP Morgan talking about what he thinks they could do with their cost base in America. It's pretty extraordinary.
Incredible, and that's going to go straight through to the bottom line and stay there. It will require some capex up front.
It will.
And one of the beneficiaries of that will be potentially what was always seen as industrial property play, Goodman Group. But is really morphing into actually a play on AI as well.
Absolutely. So this company, I think one of the best run businesses in the country. Greg Goodman called out a move into data centers a year and a half ago now, and
which wasn't early.
No, it was. And I watched his presentation. I clearly remember he said, "We're not making a call on data centers. We're just listening to our clients who are Microsoft and Amazon, etc., and them telling us what they're going to need, and we're looking at this thinking we've got to be a part of this." And they spent a lot more time talking about it on this call. Talking about the ingredients that you need. Building a data center is far more complex, costly, and timely than all of us, I think, would realise.
There's a lot involved and ongoing capex too.
You've got to own the land, sourcing the energy. So he spoke about a data center for a giga center, as they call them, for one of the hyperscalers, which would probably be Amazon. They built in Madrid, and he said we paid 70 million euros to get the electricity that was required to power that centre. So they own the site, which you need to be able to do. You've got to deal with, these are often 4 to 5 levels in quite congested areas where planning permits only let you do 2 or 3. So you've got to deal with councils. It's complicated.
There's a lot to the opportunity is amazing though.
It is.
And they're capitalising on it.
Particularly for Goodman because they own the sites.
Right. And they're in that
they've
place.
got the technical expertise.
And they can pivot.
Yeah. And they've got the relationships with the clients.
That's right. Now the ResMed redemption continues. It's back. It's had a bad time a year ago, but Ozempic, they've had it out in the ring and ResMed's looking pretty strong.
Yeah, I mean, it's just amazing. Like every analyst was putting out papers saying, not all lost their head, but some did.
Yeah, a lot of fundies got this right though, the ResMed
they
trade.
did. They
Locally, I've never seen that much of a consensus and getting it right.
Completely, that's true. And we saw a lot of good ones come onto the register and, it's just amazing how quickly the narrative can change where now we're seeing analysts saying that Ozempic could actually be a tailwind for ResMed because if you want to go and get a Ozempic and you see a decent quality doctor, he will tell you to go and get a sleep apnea test to make sure that you don't have that as well. So, it's but look, that business is growing well.
There is the learning there of how the narrative can change. And we've always been concerned about the dominant narrative and how it can flip back very quickly. Changes a lot. Block, formerly Square, Ben, numbers update here was Afterpay for those who held it locally. Again, this has had a partial redemption as well.
Yeah, I mean, so this was the fourth consecutive quarterly earnings upgrade that they've had. The company is flying. They're getting closer to meeting the Rule of 40, which Jack Dorsey is committed to by the end of financial year 25 in America.
And the last company locally to do that we talked about in one of these calls was Xero.
Yep. So, and the one before that was Altium.
There you go. Taken over.
And, they've got $8 billion in cash. The concern for this business would be if there was a recession in America, it would hit the business, as it would hit many businesses.
Of course, that's not alone.
And that's why it is volatile. When you get this sort of negative economic news, the market can freak a bit. But like they're trading on a forward PE of about 18 times earnings.
And I think we just take that to say this is what still becomes interesting to us and people will obviously want to be talking about the big tech in the States, but some of the multiples are more like 18 on some of the FANGs or the Magnificent Seven.
Well, we were looking at Google last week, and Google is trading on 18 times forward earnings,
and a lot of the Aussie tech is a lot more.
Has $100 billion in cash, and I think the misnomer is that all this US tech is crazy expensive.
Just because they've gone up, they still could.
But the earnings are going up, as we know, very rapidly.
Sure.
So even Nvidia, which is the poster child at the moment, is trading on, I think, about 30 times earnings.
Right, and that's had, in the last 18 months, 6-fold increase in earnings per share expectations.
Yeah.
So it's incredible.
Yeah, it's incredible.
Deterra, a royalties business, iron ore, but going into other royalties.
Yeah.
They want to in any case. Their result.
And maybe we could talk about BHP at the same time, because there's the tremors coming out of China. There's some pretty nasty stuff being forecast about steel and iron ore, which both these companies
dependent
make
on
money on.
Part of their money. Yeah,
it's a hard to know question. We've seen this; it's a cycle, and we don't know where we're at in the cycle, but we have seen these periods of these headlines and these things
many times
in the past.
The cyclical stocks, and we know that can play out in your favour or against you. So, but they've certainly been sold off of late.
They look pretty cheap.
Yeah.
Challenger,
again, financial services, and it's been a long journey, but light at the end of the tunnel.
Yeah, well, this was actually one of the better results I listened to. They upgraded guidance and clearly benefiting from the higher rate environment. They're benefiting from the rollout of their annuity offerings onto NetWealth and Hub24, which are the category killers these days in the industry. Makes advisors work a lot easier and better for clients as well. And I think this one's trading on 11 times forward on a good dividend yield, and it's in an upgrade cycle. So it was a really nice, clean result, and it was better
which it often wasn't.
Which it hasn't been in the past. It's been a bit of a black box.
Interpret the different divisions. Finally, car sales, cracking result. We know a year ago, 2 years ago, buying a car was awfully difficult. You'd be waiting. Now you've got record listings on car sales. A great result.
Awesome result. And really, you'd call out this is one of the other very few companies that has expanded offshore successfully.
And South Korea predominantly.
South Korea, America now as well. And it's really the growth of this business is really coming out of the overseas expansion that they pulled off so well. And very carefully over many years. So, it's in a good spot.
Great spot, yep. Right, as mentioned, the top will be back again with a second update about the reporting season, but that's all for now.